Now, the Mortgage Banker Association today predicts that U.S. home lending is going to fall below $1 trillion next year. My next guest says that fixing the housing mess is the key to reviving the economy. I want to welcome Charles Ortel. He is Managing Director of Newport Value Partners. Charles, good to have you with us on Bloomberg.
Thanks for having me on.
And you got the double-breasted thing. I mean, that's a little bit optimistic, isn't it? I mean, where are you seeing any optimism? I know you're a little bit bearish on most aspects of the market, but is there any glimmer of hope? We had the Case-Shiller numbers come in today. We had U.S. existing home sales yesterday. Is there anything good to be said about the housing market?
About the housing market, not so much, but about gold quite a bit. That's glimmering.
You like gold, but you don't like that. Why don't you like the housing market? Do you think that prices are going to continue to fall?
The basic problem, I think, that underlies the woes in the housing market is that we have a structural problem in the U.S. and advanced economies that private sector jobs have either stopped growing or are fleeing. And it is those jobs and those incomes that are the underpinning for all the value in the housing market. It doesn't make sense to take out a mortgage if you think you're going to lose your job. And we have, by government action, we have arrested the natural process of trying to clean out the problem loans, get the prices down to a level where they are attractive, where it makes sense to take risk. Instead, we've been propping up this market by artificial means, delaying the inevitable.
Well, let's tease out, if we can, tease out both parts of that. On the one hand, you're talking about the job market and saying that people aren't going to take out mortgages no matter how low rates are if they're worried about having a job. Now, do you think that there are structural problems in the U.S. right now that mean that jobs, no matter what the government does, are going to continue to move overseas?
Absolutely. I mean, I think what happened, Pimm, is that after 1989 to 91, somewhere in there, the United States and our core allies won the Cold War, but we have since lost the economic peace. And we were number one way back then. We had tremendous and have tremendous advantages, but we're not taking advantage of them. We're decreasing the relative attractiveness of putting capital in this country. We're sending conflicting signals to the investing class under both parties. We're creating uncertainty with all these new rules and changing rules and regulations. And in contrast, other parts of the world are far more interesting places to build new businesses.
But is that a function of government policy, or is it just a function of the fact that you have a rising middle class in places that didn't have a chance to become middle class before, whether it's China, India, or Brazil, that the populations of these countries are now going to be sort of able to access the same kinds of consumer products and consumer services that we've taken for granted for the last 50 or 60 years?
Yes, I think, like any champion, we entered the next match thinking that we could best all comers. And the problem is that very suddenly, after 1989-91, I argue around 2002, 2003, when internet and broadband access made it feasible to create complex businesses from a very small base to serve global opportunities, at a certain point in time, the imbalance between the supply and demand for labor was huge. And companies, rather than thinking about how to sell products and services to this growing array of potential customers, instead said, you know what, it's much simpler to cut costs in the United States and Europe and Japan and places where labor is expensive. And the pressure on the existing labor force is relentless, and it's only going to continue. Between 2008 and 2009, the total amount of income, from wage income and proprietor's income, was down 7.6% in 1 year. That's a massive amount of money. And we see no signs in the economic evidence that's come out so far to suggest that we're reversing that trend. In a related...
So do you believe that it's a zero-sum game where some have to be losers in order for some other countries to be winners?
Well, I think until we cure the basic structural problem that we have too much debt on this particular economy, on the U.S. economy, but according to Federal Reserve statistics, we have $52 trillion of debt. And if you look at how much private sector income is available to service that, it's about $4.6 trillion, $5 trillion, depending on what you use. That's a massive amount of aggregate debt in the entire system against a very small amount of private sector income.
So it's almost like having that elephant balance itself on a little peanut again.
Exactly. And, we just don't see, we're not getting the type of experienced Wilbur Ross-style restructuring approach to the American economy. Instead, we have politicians really in both parties selling a lot of hope, selling a lot of change, but very, very light on the big specifics.
But hasn't that always been so? I mean, to be able to say that it is the political class that is responsible for the mess has it ever been so that the political class has come through with all the solutions?
I would argue that in World War II, I think you could make the case that the political class at the state, local, federal, military levels did come together. There was shared sacrifice. There were moments in time. We weren't around then, but history books would seem to tell you that it sure looked like we weren't going to win necessarily, and we pulled together, we came together as a country, and we got enormously lucky in 1945 because the world had been destroyed twice. And we were the clear winner. We were able to build out infrastructure for 54 years. In the 54-year period from 1945 to 1999, household equity never went down. And the volatility in returns was very, very low in this country. But from 1999 forward, we've had major changes, trend changes.
Well, now you have people that are underwater in the value of their homes. They owe more on the mortgage than the home is actually worth.
Exactly, and it's a huge. It's not a great place to be, but it's from a pure financial analysis standpoint. Are you wiser to crystallize the loss now and walk away and live to learn and earn a better day, or should you pretend that this is going to get better, only to discover that next year it's worse, the year after it's even worse? And we just don't think that we've been taking the tough medicine that needs to be taken.
Charles, to put into perspective, we're talking about the political will of policymakers to make difficult decisions. You say that's not something that has occurred either under Republicans or under Democrats. What do you think happens next Tuesday during the election?
Well, I actually have taken a little bit of personal time to take a pulse of what I see going on. I actually went out to a few Tea Party events just to see for myself what the people who attend those events are like. And I think we are in a period not dissimilar from, say, 1858, 1859, where...
I confess, I cannot think back that far. So,
it's only last week.
So help me understand, what was 1858, 1859 like?
What history shows clearly is that you cannot erect a lasting solution to a problem on a contradiction. And in this country, there are two very contradictory approaches to life. There's, on the one hand, the collectivist approach that the state will take care of you cradle to grave, which has not yet come to the United States, but we're close. And then there's the individualist approach. And you can't do both. You can't have a John Lockean government where the focus of government is to protect private property, and a Marxist approach where you want to abolish private property.
Yeah, but can't you have an approach that's somewhere in the middle? I mean, isn't that where life really gets lived, is in the gray area, not in the black or not in the white?
And that's why I bring up that period. Abraham Lincoln rose to prominence when he gave his Cooper Union speech, and he urged the nation to beware of sophistical contrivances, exactly that type of approach, where you promise two contradictory things. I was for the war before I was against the war. We're in a moment now where the public needs to get engaged, and I think the public is getting engaged. It needs to hold politicians of both parties to account and demand that we get clear answers, clear solutions, clear results. We're just not getting that out of government yet.
But is it the politicians that are not giving the clean account, as you describe it, or is it the electorate that wants it both ways? People want to pay lower taxes, but they also want to receive the benefits and the services from the government sector. You have it in the corporations, whether they want government contracts or whether they want government legislation that would help their various businesses, and then at the same time talk about perhaps having lower corporate taxes.
You've hit your nail on the head. Like other situations, we've been in a place in this country where we've been able to get away with economic murder. We have been spending, in government statistics such as they are, show that we're spending $5.6 trillion currently, and we're collecting $4 trillion. Now, a second grader will tell you can't go on spending 40% more than you earn for very long. We've been able to get away with it because compared to other countries, we seem to be less risky. So
as they say, let's rush out and get a second grader.
Exactly. And it suggests that, unless we change course, maybe the smartest place to invest is in companies that make printing ink for currency.
Printing ink for currency.
Well,
because I know that you are a big follower right now of gold.
Absolutely. I think gold is the canary in the coal mine. Gold has been telling us really since about going back to 1999, but recently since 2007, gold has been telling us that people are losing confidence in this form of government. And that's a very dangerous place for us to be in. So that's why this election next week is very important, and it's not going to be over next week. It's going to be at least 2 years, maybe 6 more years, as the public gets engaged, thinking through what are our realistic options for redefining.
But is it a realistic option for people to be invested in gold? I mean, gold has some inherent properties that everyone loves. It's shiny, and it has this historical store of value, myth around it. But on the other hand, it's pretty difficult to transport. It doesn't necessarily work at the store, and you've got to turn it into a specific currency, at least right now, in order to eventually use whatever gains you've amassed with gold.
I think if we were in a normal status quo position where the system seemed to be working, if we were back in 1948 with all the world in front of us, I'd take that point. But I think the larger message of the markets is we're not there. We entered financial purgatory in 2008 in September, and now is the time where you really have to take stock of your realistic options and think about doing things that were anathema. Think about taking your bait off the table, putting it, if you're a small investor, you could buy Krugerrands. You don't have to buy gold bars. And stay on the sidelines for a little bit. Let's see how the election resolves itself. Let's see what happens next year, because we're certainly going to have a divided government again next year. I don't think the Republicans are going to take both houses, and I don't think Obama's going to move to the center. So, the next 2 years, in our view, are going to be periods of heightened volatility and uncertainty. It's a trader's market. It's a professional market. And perhaps the retail investing class would be wise to retreat.
Is there a place in the world, stock markets, equities, that you would be investing in? I gather not the United States.
No. There is one country. I'm going out to India now for the 11th time since 2008. I've been studying that country carefully. It's not for the faint-hearted. It's got its pros and cons. But on structural issues, we think India has many, many advantages. And if you take your time and do your homework, there are a number of interesting plays out of India where you're going to have sustainable, intrinsic, unfinanced demand as that economy matures and enters the top ranks. We're interested in India.
All right. Well, you're going to give us a report when you come back from India.
I'll do my best.
All right. Thank you very much. Charles Ortel coming to us from Newport Value Partners.